the importance of Delaware isn't just within legal, it's with accounting. And we are, as Ian said earlier, we're thrilled and delighted to be collaborating strategically with Frazier Deeter, especially because they're a US firm in the UK, and that US knowledge is really powerful in helping scale ups in key sectors. And it's an asset you should really engage with. And with that in mind, Mike and Malcolm, give us a quick 5 minutes heads up on why all that's important.
Yeah, thanks, Mark. And first of all, just to echo what Tom was saying there about Delaware C corporations. There are lots of good tax reasons why you don't want to have an LLC. Sometimes you have to, but generally it's a bad idea. And out of the 250 or so companies that we've worked with setting up in the US in the last 2.5 years, I think, Mike, all but probably about 2 of them have ended up using Delaware C corporations as their US entities. So it is, it's definitely the norm. Definitely as well have conversations with your lawyers about the reasons for forming an entity in the US. It is possible to trade with the US and not actually have either a US entity or any kind of US taxable presence. But usually by the time that people start talking to us, they've got beyond that. They've made the decision that there are commercial and legal advantages to having a US entity set up. Once you have made that decision, then there's a couple of things that you're going to need to think about from a tax perspective. One is the whole federal tax position, but the US is unusual, as we've been hearing. There's obviously 50 states, and there is a state level of taxation as well. And the rules that apply for determining whether or not you've got a federal tax position to consider, they are different to the rules around whether or not you've got a state tax liability to consider as well. So you do need to think about both of those areas. If you've made the decision to set up your Delaware C corporation, I think one of the first starting points to think about from a tax perspective is, what's the operating model going to be for your US entity? Now, you've got a few choices here. You need to think about, well, okay, do I use my US entity to provide services back to the UK parent company or the European parent company and carry on using the parent company as the contracting entity with any of your customers in the US? Or do you actually use the US entity as the contracting entity for any commercial activities in the US, particularly with your customers? And I think particularly in the biotech space, often the answer is that there's going to be commercial drivers for using the US entity as the contracting entity. You just find with clinics or other procurement organizations in the healthcare space, there is often a preference for them in the US to use or to contract with a US entity. But if you're doing that, then you need to think about the accounting and tax consequences of doing that. And if you're using your local subsidiary in the US to contract with the customers in the US, then all of the income from those sales are going to be credited to the US profit and loss account. However, in all likelihood, a lot of the expenses in terms of creating the IP, creating the business proposition that you have, they may have been incurred in another country. So we need to work out, well, what's the right way of getting an appropriate amount of profits or income back to the home country where all that entrepreneurial activity has taken place. And that's one of the key things that we will help you establish first of all. In tax terms, it's often referred to as transfer pricing, but in reality, it's all around but it is very it's a very important area to consider. So that's one of the key areas that we will focus on. But then, Mike, I think the next stage is all around just getting your head around some of the compliance issues with the state taxation as well as the federal taxation.
Yeah, thanks, Malcolm. So I think, I always tell our clients that the US has a 2-tier income tax system, or beyond income tax, in addition to income tax. It has a federal tax system like most other countries in the world do, and as far as tax goes, it's relatively straightforward. But in the US, we have the special second area of state taxes. And when you move into that area, I always tell everyone it's a matrix system where you have 50 different states. They have different sets of taxes as Malcolm referred to, there's issues around that. They don't follow the federal rules all the time. Sometimes they do, sometimes they don't, to make it more complicated. But I think mistakes in that area that we see companies making are just not dealing with these issues or being aware of them sometimes. Sales tax, which is our version of VAT, is probably the most worrying of these, because like VAT, it's applied to turnover. So you could have companies in the US with low profitability, maybe in the beginning, but still have a high sales tax exposure because it's based on their turnover. And that's a dollar issue, right, in and of itself. But the other issues and the mistakes that are made is, and by it happen because of ignoring these things, is these are issues that typically when companies raise money or have an exit and the due diligence teams come in, these types of things are at the top of their lists. So we see situations where maybe it got ignored, buyer comes in or investor comes in and they think, they get concerned that there's an exposure they're stepping into. And then when you're trying to get your company funded or sold, they're making you spend time, go back and file late returns from the last 3 or 4 years and these types of things. So I think that's probably one of the biggest mistakes we see, is just not dealing with this. Hopefully it's not a large dollar issue, but like I said, even if it's not, it can cause an administrative headache at the worst time when you're trying to move quickly and fund your company or sell it. And another interesting aspect that we see is companies coming in is Delaware flips. Sometimes they're asked by investors to put the U.S. company on top. Malcolm, I don't know if you want to touch on that a little bit, since a lot of those are UK issues.
Yeah, and it's something that's very doable, and there's sometimes a little bit of complexity around it, particularly if you've got business angel investors in the UK who've benefited from some of the venture capital tax relief, such as the EIS or SEIS. So there's a lot of work with lawyers in making sure you get the paperwork right on that. But it is very doable from a tax perspective in a tax-free or tax-neutral way. But something to think about if that comes up from the investor.
Yeah, and then just maybe to close out, a couple other things that are common that come up are when, typical, the classic situation, UK company with a US subsidiary issuing stock options to the US employees, those should be stock options in the UK parent company, not in the US company. And even though when it becomes compensation, it's compensation to the US company, but you need to make sure that you get a US valuation for those options. Sometimes you'll see companies not aware of this and they follow on their existing or their UK valuation, and the US valuation can be very different. And if you don't issue those shares at the right value, it can get very messy, particularly for the US employees. So you might have some very unhappy US employees if you don't make sure those shares get priced correctly on the front end. And I think, I think just another thing just to keep in mind, and this is, not so much a dollar issue, but administrative, I think, and to be patient in the US, it goes back to that state tax system where even if you're doing things correctly, dealing with the US states can be slow and cumbersome sometimes. That's another good reason to make sure you have somebody engaged that knows what they're doing, because it can be very difficult just getting things done sometimes with the states. May not be a lot of money, but it just becomes an administrative burden on the company. So just be aware of that also.
Mike and Malcolm, that's absolutely fascinating. Can I ask you, just as a final question, what's the most complicated aspect of establishing a US entity that companies either underestimate or overlook, in your opinion?
I mean, I think it goes back to what I just said, the state aspects of things. I think, I'm not sure I'd call it complicated. I guess you could call it complicated, but it's just kind of messy. And I think people are surprised because they're used to coming in and thinking they're going to deal with one tax authority, the feds, and then you get into the state thing, and they all have different ways of doing things. And just getting set up properly, paying your taxes, filing your returns sometimes can get complicated and messy just because you have a large variation in how these states operate.
I'll just give you a quick example of that, if I can, Mark. I mean, if you look at a lot of our clients in the tech and biotech space are offering software as a service type offerings to their clients. If you look at how that's taxed under the state tax system, the sales tax system, I think about 30 of the 50 states would treat a SaaS offering as taxable, the other 20 wouldn't. So you need to know where your customer is based to know whether or not that could be taxable. And then you've got further exemptions, various kinds of government bodies or different clinics, etc., could be exempt. So just understanding whether or not you need to charge sales tax it can be quite a tricky area to start with.
Yeah, I mean, it's a complicated landscape, but thank you for giving us a roadmap. And obviously, moving forward, we're going to continue to give more of these roadmaps out with you guys, because the advice you give is absolutely pivotal.